welcome everybody. SF Live episode 166 on this Thursday. In a few short seconds, I'll be joined by Brian Skanderbeg of GFG Resources. He's president and CEO. And we'll be joined by a special guest as well. It's Bill Sheriff. He's a founder or co-founder of Group 11 Technologies. And we're going to talk about their Rattlesnake Hills deal that they just closed on yesterday. And we're going to talk about the deal terms, of course, but also what it means. Why did GFG enter into a deal like that? And what is Group 11 bringing to the table? And of course, they have an interesting technology they want to apply. So we're going to talk about that as well. Before we do that, two things, of course. Follow us on YouTube and follow us on Twitter. We do all our interviews live. So don't forget to turn on the bell notification as well. You get push notifications sent to your phone or your desktop computer or laptop even. And make sure to use that to your advantage, of course. And also be reminded this is an interactive format. So if you do have any questions about the transaction and the technology Group 11 is applying, make sure to use either hashtag AskGFG or put those questions in the YouTube chat. We will see them and we'll get to the questions during our conversation or right after with the two gentlemen. Now, without further ado, let me switch over and make sure that everybody's unmuted. Perfect. Gentlemen, wonderful good morning or good afternoon where you at, and thanks for joining us.
Good morning, Kai. Thank you very much for having us as well. Couldn't be more pleased to join and talk about the activities for both parties here today.
I think it's perfect timing. We got gold at 1765 right now. It's a good time to talk about a gold deal and potential production scenario.
Yeah, look, we're happy to walk you through where we feel about things, and I couldn't agree with you more that it seems like the sector's based a little bit, and it's a good day for gold. And look, like all of us, we want a good day for gold to put out some good news on. So I think the timing's great, and really look forward to introducing what we think is a really revolutionary concept.
Okay. Run us through the deal terms real quick, Brian, and then Bill, you're going to talk about technology and what you see like the opportunities as well.
Yeah, really what we did, Kai, yesterday is we announced an option agreement with G11, and this agreement is structured to allow G11 to earn up to 70% of the project. And the crux of it is carrying GFG through into production, carrying the costs associated with that. But the real interesting part of this deal is that we're trying to apply ISR technology to the Rattlesnake Hills asset. And this part of the structure is really what attracted GFG. So it's a conventional option deal, 4 stages to earn into it. Initial metallurgical testing, followed through some initial field testing through 5-spot wells, into commercial production, and then some staged equity and cash payments to obviously advance this through to a full 70-30 joint venture. So it's a pretty conventional joint venture on an unconventional process.
Okay, interesting. Bill, let's talk about the process first. I want to dive a bit deeper on the deal terms in a second as well. But just to get everybody on a level playing field, what are we actually talking about when we're talking about the process?
Well, it really is the application of in situ mining, which is the dominant method in uranium currently, or about half the world's production is in situ, and it's been going for 40 some years now. It's very, very well understood in Wyoming, which is one of the reasons we came to the Rattlesnake project. I was familiar with it also that I was involved with it a decade or more ago on the conventional side. But our uranium company, Encore Energy, is a domestic ISR producer in the States, or soon to be producer. And we've got a very good depth of in situ professionals, including one gentleman that was the co-discoverer of in situ mining. And he's leading the chief technical officer position and leading Group 11's movement into other metals. You've probably seen a bit of in situ on copper, which is probably the second biggest application. It's still in its infancy, but it works well. Here again, it doesn't use as environmentally friendly a solution as could possibly be done, but it's all right. Works well, and certainly making some technical breakthroughs on that. What allowed us to move into this was our involvement with a gold company in the Yukon. We had a gold-bearing sulfide con that was too fine to further recover from gravity methods, and yet quite valuable. And so we're looking for alternative to shipping it away to a Chinese smelter or another smelter, and or using cyanide. And we came across EnviroLeach Technologies, which is also owner of Group 11. Group 11 is private, held by 3 different public companies. And just through a bit of a happenstance. They said, hey, let us have some of your material before you apply for cyanide, let us run it. And they allowed our team to go witness it, document it. It worked superior to cyanide. And so we actually were the first commercial application in the Yukon of applying that solution or lixiviant to the gold extraction. And based on that, coupled with the relationship with the uranium company and its ISR technology, we started thinking, maybe we should look at this, because there are a very, very few places in the world where gold has been extracted through ISR. Although in each of those, it's been in Russia and it's been with cyanide, which has not been environmentally acceptable, and it's been pretty bad for the local inhabitants, as you might imagine.
Okay. One thing is. Okay. Sorry, I just got a message here just to make sure that this runs smooth since we're doing it live. So I'm the AV technician, editor, and publisher, and everything in one person. So that's why. But you mentioned you tried it on sulfide, and that's one thing I highlighted in the press release as well. It says, it does better than cyanide on sulfides. So for me, looking at it, of course, like cyanide doesn't really work on sulfides. Like, what's the recoveries there? It's about 50% at best for sulfide recovery with cyanide. So I'm curious to find the difference there.
Yeah, it varies. When you say sulfide, you're covering the whole gamut from 10%
refractory
sulfide to transitional ore to 100% sulfide, then to refractory, which is within the sulfide lattice, and you have to crack it. So talking about a whole spectrum of things. Simple concept here is that the solution that's environmentally benign that we use from EnviroLeach, we have an exclusive license for ISR applications. It's a very, very strong oxidizer as well. And that's why it's working reasonably well on the sulfides. Obviously, it works like a charm on oxide. And when we used it on our sulfide con, the gold was largely oxidized. So it was a bit of a crossover there. And we were getting even in oxide, we were getting much quicker, superior returns with this chemical than with cyanide.
Okay, it's interesting. Like, it intrigues me. Like, the whole technology is quite interesting, right? And like my question for you, Brian, is as well, like what did Bill show you, or like how far could you lift the skirt, the proverbial skirt, to get Brian over the line and say, okay, let's do this. This sounds like the feasible way to do. And Brian, what did he say? What did he do?
Yeah, look, I give Bill a lot of credit in G11. They approached us with a concept. And prior to a few months ago, I'd never heard of G11. But good on them. And I'm really happy they did reach out to us, because through that dialogue, what I was able to see was essentially some of the data that Bill's talking about, which is a proprietary solution technology that can replace cyanide. Okay, and that is and can be truly revolutionary. But when you start looking at what they've already tested it on, as you alluded to, they've already tested it on a sulfide con. They've already done some leaching and comparative testing versus cyanide, and those that data really showed us that it's not a question whether this solution will dissolve gold. And if that risk is taken away, it becomes a physical question of, okay, how do we apply this into a field setting for gold? And then it becomes, well, there's no difference than this in what's achieved for uranium or copper already. It becomes the inherent deposit characteristics that are the challenge. And so what we saw was a really direct path to unlocking the legacy value in the Rattlesnake Hills asset. And compared to viewing this in a conventional option deal where you need to show scale higher grades. And I will allude to the fact that Rattlesnake Hills has about 100,000 meters of drilling in it. The deposits in their core are well drilled off. The scale of them isn't compliant to 43-101 resource, but it's probably 500,000 ounces, maybe a little more. It can be expandable. It'll be in that 0.5, 0.6, 0.7 gram per ton range. So what you can see is it doesn't reach critical mass yet. If you wanted to look at it conventionally. Although what this group does is look at it unconventionally, and something that was worthless or maybe worth $1 an ounce or, not very much, all of a sudden becomes worth a very different multiple with the technology they bring. So in working with this group, we were able to see, they bring immense credibility technically, a track record on ISR that has been applied successfully in uranium, proprietary technology that is patented through EnviroLeach and licensed. So the IP component was pretty locked down. So all of these things stacked up to say, for GFG, this is the best path for the asset. We're happy to be partnering with them. We plan to be equity holders as we advance this project. And I think there's great wins at the asset level and at the equity level for GFG holders. And I just think when we looked at all the paths for the asset, it was no question the best path for us to choose.
Okay, let's talk about the terms of the agreement, because I think they're quite interesting as well. And how do I phrase this? So you got to spend $9.5 million in expenditures, for example, Bill, over a time frame of 2 years. And curious, like as you said, you're a private.
Little longer. But...
Oh, wait. Sorry, it's 12, 18, 30, 54 months. Sorry. Quick math. Sorry about that. I just saw the 2 years in the press release. That's what caught my eye. But let's assume you're a private company, right? And we all know the public company model. Everybody's got to raise money to drill and explore. How are you planning to finance that?
Well, we're the exact opposite. And that's the attraction to the three public holders of the company, Golden Predator, Encore, and Barrel Leach. We, outside of the initial seed capital, which has already been spent, a year ago, there will be no more contributions from the public companies unless they just happen to want to participate in the financing. We're the exact opposite. In general, we're marketing ourselves to the 99% of the world that hates mining. Our traditional opponents, quite frankly, the ones that criticize mining, that don't like it, the green movement, the ESG movement, this fits right in with it, because regardless of your political take on mining or your personal views, simple fact of the matter is we need a lot of metals. We're going to need more. And as the green energy thing moves forward, we're going to need even more than we thought. And so mining isn't going to stop. So it needs to evolve. And that's exactly what this is. And as such, we're going to run it as a high-tech company in terms of its financial modeling, how we raise money. And that is the model of where you stay private until you actually monetize the project. Then you go public. It's more of an exit event going public than an entry event. And that's made possible because of the wealth of, the world of high tech and the world of more technologically oriented companies, and that there's a vast difference in the amount of capital available. And also in the timeline that capital is expected to be deployed before needing a return. It's very, very uncommon for anything in the high tech to go public within the first 5 years. And we sort of bandy around, if you pin me down for a number, 5 years is when we plan to go public. I don't know if it'll be 3 or 6, but we don't view going public as a fundraising mechanism. We can fund this privately and largely in the U.S., and that's what we intend to do.
Okay. So it says here in the schedule, more or less, of the agreement stages, stage 1 and stage 2, you actually own 0% of the project. Is that correct?
That's correct.
Yeah. And then at this point, like later on, phase 3, let's assume you make the $8 million expenditure by then. You own 51%. Brian, maybe a question for you there is, like, what happens if stage 4 doesn't happen? Do you get the full 100% back, or does 51% stay with Group 11?
Well, there was some really good discussion and negotiation that went into this point. So the challenge with many option deals is a partial success, and you hang a project, and nobody wins there. You have fragmented ownership. It's not going anywhere. So when we sat down and talked about what success looked like at this project, success was commercial production at X amount level of ounces per year. And if we want to achieve that, and we're going to design this deal around it. So what we said was that stage 3, which is where they have to essentially get this thing into commercial production, $8 million is the minimum expenditure. The actual commitment to get this thing into production is likely significantly higher than that. It's a number we agreed upon as a minimum. So unless this thing moves into commercial production, there's no vested interest to G11. So let's just say we took it to the field test and we had a partial success. We got 1,000 ounces out of it. That under agreement isn't defined as commercial. So this is really designed to say, let's both win as a success, and let's not hang this project if it doesn't work as well as we think. Both parties will be flexible, and I think we would always view the agreement such that, but ultimately it needs to go to commercial production. And to get to their 70%, obviously then GFG would become compensated through an equity and a cash payment after that commercial has been established.
Yeah, I think it sounds pretty risk-free to GFG, so congrats on that. One question, commercial production. You mentioned it a couple times. Like, how do you define commercial production? You said you don't want to be 1,000 ounce bulk sample. That's not defined as commercial production. So, Bill, what's commercial production?
Well, that's proprietary at this point. We've got a number that we've agreed on that we is not firmly entrenched, but it'll be the result of a feasibility study.
Yeah.
It's probably less than you would have. I think it's safe to say it's less than you'd see on a conventional operation, but significantly more than 1,000 ounces.
Okay.
Yeah.
And our capex to get there is going to be considerably less than a conventional operation as well. Just by comparison, a typical ISR uranium plant in Wyoming might be 50 million, which is significantly cheaper than a large mine. And then of course your well field development costs. But the attraction to us in the first years are, in essence, we have the world's perfect laboratory to prove and develop and refine our test parameters. It's a huge property position. It's in the #1 jurisdiction on the planet for running an ISR operation. Wyoming is quite adept at the ISR regulatory regime. They know most of our players individually, having worked ISR properties in Wyoming in the past, with the added complication of radioactivity, which we don't have in the gold side. So it's a perfect place for us. It's a perfect deposit. We have a multitude of different rock types and they carry gold, as well as styles of mineralization of gold. So it's a perfect laboratory that's sitting on a great gold deposit. So it allows us to, instead of testing 20 different properties, it allows us to do all 20 tests on one property. And I picked 20 out of the hat, maybe 30, maybe 100, maybe 14, I don't know. But it's going to take some testing and some refinement to do these tests. But they'll start here in the next couple of months. And one of the reasons they can start is there's 100,000 meters of drilling on here. So we've got a core library sitting there that's at our access that we can pick and choose different parameters out of what's already been done without having to go out and get permits to drill, re-drill it, and move forward. So it saves us probably a good 2 to 3 years in head start time getting on it. So it really is a perfect win-win situation.
It sounds like you're diving right into the testing, and it sounds like production is just around the corner. But run us through the state, like not just the agreement stages, but the operational stages that you need to get through. You mentioned a feasibility study needs to be completed. What else needs to be done to get to a certain, let's call it, production decision before you start sinking $50 million plus the wellfield costs?
Well, I think the first thing we do, and this is what starts rather soon, is you do column leach testing on the core. And if you compare that to a conventional operation, you don't do column leach testing until you're 7 or 8 years down the path of exploration and have built out a resource and everything else. So we'll get on that right away with a whole lot of these different types of gold occurrence and different rocks. Assuming those work, or some of them work better than others, then we'll refine the next level of testing will be to go in with coarser material, because obviously you want to find the sweet spot. The coarser the material, the cheaper it is to process. And go from there. Then we would start conducting, at this time we'll be doing also a lot of work on going back through the logs and evaluating the hydrology that wasn't really focused on the first time through. You don't usually look at that on your gold program. And that'll tell us a lot about how the water moves under the surface, where it is, and that sort of thing, because ideally ISR needs to be underwater. And so that's something we'll be looking at. And that will guide us as to where we put in, assuming we meet with success. What is success? We don't know yet. We'll let you know as it goes along. Is it 5% recovery? No, that's not success. But at the same time, 50% probably is. 30% quickly probably is, if you can demonstrate that you get up to 50 later. So those are all kind of moving targets, but we'll take the best and try and optimize it. And when we optimize the hydrology with the recovery and the crush size, we'll actually pick a spot on the ground and do a 5 spot, which is where you have a central well and then 4 around it, just like the 5 points on a die. And all of that can be achieved, especially with the permitting of putting that 5 spot in. That's where Wyoming, you're way ahead. They understand it. We understand what they want and what they need to get that underwater aquifer exemption. And so it fits within the timetable of our agreement. The one thing I would point out, and the epidemic or pandemic has certainly made everyone aware of this, is you can easily have a year delay on anything. And so they're built in extra payments to buy extra time all the way through this. Hopefully we obviously don't want to pay them. We'd like to be right on time and get through this. But there's provisions, if we run short because of permitting or because of, who knows, unforeseen supply shortages, what have you, we'll still be able to achieve it under the terms of the agreement.
Okay.
I think there's a little built to that, Bill, too, is that when we were negotiating this, there's a full understanding. There's a lot of variables that aren't defined, so we had to take an approach that included enough flexibility, whether it was expanded time frame or structure or parameters, definition of what feasibility might entail, because we are moving into the unknown here. So we had to leave enough flexibility in the agreement to ensure that all partners could advance this forward, given what's ahead of us, and given we are trying to do something that's completely new. And I think that is reflected in how we structured this agreement.
Trying to get a bit of a value understanding of the agreement, because people like to put a value on stuff. It's like, oh, so they sold the project for X, right? One point as well is your Bill, you will be carrying the cost of maintaining the license, the property license, in good standing. Roughly, what's the cost there per year? I'm just trying to get an understanding of that.
Brian, would you like to comment on that?
I can do it. I mean, there's leasing costs in the land. There's a warehouse and storage facilities. I mean, we always looked at it as kind of like, maybe 400,000 Canadian is covers off land, covers off the storage and various leasing and insurance, and we call them just the base fixed costs of operating that project. So I think that's a reasonable number, maybe 400,000 or 500,000 Canadian, to reflect, as to say, this is the baseline, this is what it takes to maintain. And then the dollars we talk about are really what's going into the ground, or what's going into the lab, or what's going into the true test work. And that's on top of what is just the base maintenance fees of keeping this thing going. It is on BLM ground, so this comes inherently like any other piece of tenure in the US, where you're making a payment to maintain that tenure.
Sounds good. Last question, and then we can wrap this up here. I think it was really comprehensive and great overview of the deal structure. And of course, Group 11 is a private company. You mentioned it, Bill. And you will also be the manager of the project. So for me, from a public company perspective, and I think that's a question for Brian, unfortunately, is what does it mean in terms of news flow for you? Because this could, like, let's say this is all going the right direction. This is super positive. Like, who controls news flow, and how much and when can you publish stuff? Like, how material is that to you? And so that's more or less a question.
Yeah, it's a good question, and something we have thought about significantly. There's a confidentiality agreement that binds parties, and obviously under most conventional joint ventures, you have reciprocal approval of any release and reference to the other party. So G11 would obviously send us a press release, we would send them a press release, and it must be approved. So that just dictates how we communicate. The other question, I think more what you're alluding to, is what we communicate. And when we talk about that, I think there's a clear differential between what is results and what is processes. And I think it's important to distinguish the two. So let's just say we were able to achieve a column leach test that recovered 50 to 60% of the gold in 18 hours from a minus 80 crush. Okay, that's data and that's results. I think we could definitely publish those. We're not going to publish the proprietary and the intellectual property, which are patented. So we're not going to be talking about solution chemistry. We're not going to be talking about the details of things that are ultimately inherently private to G11 or EnviroLeach. But I think there's very clear documentation about what we will be able to talk about, which is results versus processes. Bill, I'm not sure if you want to expand that.
No, I think that's right. And there's the real upside on this is well beyond the rattlesnake, and that's one of the reasons GFG benefits is by getting an equity stake in Group 11 going forward. If this works here, it revolutionizes. You talk about disruptive technology. It doesn't move mining ahead; it changes it. And with the proprietary aspects of it, it opens up an entirely new world. And that sort of return dwarfs the initial prize.
Okay, perfect note to end on, gentlemen. Thanks for joining us this morning. It was great to have you on SF Live here, episode 166, and interesting deal. I'm curious. I'm gonna follow it because I find it quite interesting. It's the same thing for me as with ore sorting. It can be quite revolutionary and can make projects work actually. So I'm curious to follow that. Thanks so much for joining us.
Great, thank you, Kai.
Thank you very much, Kai, for the opportunity, and thanks to your listeners too.
Fantastic. And everybody else, this was SF Live episode 166. We were joined by Bill Sheriff and Brian Skanderbeg of G Resources and Group 11 Technologies to discuss their Rattlesnake Hills transaction. Make sure to follow us on YouTube, follow us on Twitter, and don't forget to turn on the bell notification as well. As we do all our interviews live, you will get notified with a push notification on either your phone or in your browser that we are live with another update. Make sure to use that to your advantage and join us later for another live interview with Howard Klein. And stay tuned